And for more on the currency markets, we're joined by Keagan York. He's the head of Forex strategy and co-founder of Compass Global Markets. Keagan, good morning. Thanks for joining us.
Not a problem.
Are you getting nervous at all? You know, it's 1 week to go, Keagan. Do you have any doubts that a compromise will be reached?
I've got no doubts. They have to do it. And, well, if they don't, we're going to probably get to an end to the concerns from the markets, and you'll probably see some US dollar strength come on the back of even a default anyway.
And even if we do get some sort of compromise, Keagan, it moves on to what David and I were talking about, because the ratings agencies in coming months could downgrade US debt regardless if we don't get some sort of comprehensive plan to tackle the long-term budget deficit.
Yeah, as the President himself said, if they just kick the can down the road, I don't think that's going to be a good result for the US economy. I think what the markets need, not just in the US and globally, is they need some hard results to come in the foreseeable future. And
you think we're going to get those hard results?
I think they will. I would like to say that that they've got plenty of time, which they don't. They have to come to an agreement. Both sides are going to have to give a bit of ground. What the ground that they give will be, that's going to be harder to pick. I don't think that they can go to the policy of going through the same crisis again in 6 to 12 months' time. It just won't happen. Before an election, there's too much toing and throwing. They have to get this sorted out in the next, well, by the 2nd of August.
Keagan, it seems like the Aussie dollar is your currency of choice. You say it's the currency to diversify into. We've had the governor, Mr. Stevens, speak only a matter of minutes ago. Anything that he said that makes you change your view?
No, not really. He just went along the same lines of, people are seeing this crisis at the moment worldwide, and they're continuing to save their pennies, to be precise, and we'll go along with the idea that the Aussie is going to continue to remain well bid while gold remains well bid. You've got Aussie interest rates from the RBA at 4.75%. If you have this going around the markets and you've got nowhere to invest your dollars at the moment, you can't put your dollars in Europe, you can't put your assets into the US economy. There's only so many currencies that you can leave it with that is going to be of creditworthiness for a fund or a model fund or anything like that. So we can see the Aussie. The results are already being proven in the Kiwi. Kiwis are amazingly well bid on the back of let's be fair. They're not the most. They don't have the most biggest commodity base of like what Australia does, but they're
and Keagan,
they're holding in there very well.
One quick question on sterling. Big number today in the UK, 9:30 local time. GDP. You've been bullish short term on sterling, but you think that if we break below 162.45 versus the dollar, you're going to change that view. So possibly today, if we get a weaker number than economists estimate, you might change your view.
Definitely. Well, most of the strength of the sterling over the last couple of days has been more as a result of the US and not of the UK economy itself. So if there was a slight shift to this, where the movements or the expectations of data coming forward are weaker than expected, you're going to see some pressure come under the sterling.
Okay, Keagan, thanks for joining us. Keagan York there from Compass Global Markets.